Financial argument. Follow us on YouTube.
Let's get into the economic collapse financial news. Now we're going to head out to Greece right now, and we know that austerity, it does not help the people whatsoever. Now the Bank of Greece is coming out, and they're saying that the economic crisis, the strict austerity in Greece, well, it is not working at all. It's killing the Greek people. Because what we are seeing right now is that there's a strong impact on the health of the population when you have this type of austerity. And they actually broke it down of all the things that have increased since austerity. And you have to remember, people are very stressed. They don't have health insurance. They don't have employment. They don't have housing. They feel that things are hopeless. They have no future in their heads where they're seeing anything good. And what they're saying is that suicides, they have increased because during this time period when the economy turns down, we do see an increase of suicides. We saw this back in 1929. Actually, we saw in 2008 suicides increase. We see infant mortality is increased by 50%. Increase of parts of population with mental illness, especially depression, that is increased. Chronic disease increased by 24% in Greece. So what we're seeing is that austerity is really put into place to keep the bankers wealthy and happy, the creditors wealthy and happy, the central bank system continually operating, and the people pay for all of this, not just with their hard-earned money, but with their health, with their families, and everything else. Now, here in the United States, they're trying to keep the illusion alive that housing is fine, retail is fine, everything is working perfectly here. No need to question anything. Now, the U.S. government hates when you question things, because then they have to come up with answers, and they have to prove it, which becomes a little difficult because most of it is lies. But we're starting to look at the housing market, and we see that housing starts, well, they declined by 2%. And housing, when you look at it, really has gone nowhere. Now, what they did is they went around to the cities, 20 of them or so, and they decided, you know what, let's create bubbles in these cities. And this is exactly what they did, and it's very easy to create a bubble. And I discussed this many, many times before. But what we're seeing right now, this is coming from a Paragon report, which was released last week about home prices in San Francisco. They're saying they have cooled significantly. In April and May, the median price of a house rose 2% from the prior year to $1.38 million, which pales in comparison to April and May of 2015, which saw a 23% increase from the prior year. Now, they're looking at this and they're saying the cooling is most notable in the high-end market, and that's usually when it starts. And then it comes down to the lower end and the lower end, and this is what we saw back in 2008. And we're starting to see the bubble pop because this is dramatic right now. And venture capitalists in Silicon Valley, their investments, they have fallen by 20% in the first quarter from a year earlier. So this is already showing that things are not going well. Now remember, those 20 cities that they picked, this is where they drove the prices up. But all the outlying areas, and I'm getting a lot of email from people who are living in many different towns where their houses are between 200,000, 400,000, maybe a little bit more than that. They're saying it's very, very difficult to sell the house. People are not coming out to see it. They're lowering their prices. They don't understand what's going on because everyone is telling them that everything is fine. And what we're seeing right now is houses, they're staying on the market longer and longer and longer. And now we're starting to see in these cities where they pumped up the bubbles, everything's starting to cool. It's starting to pop. And when this goes, this is going to be a major, major problem, because this is going to bring down the entire economy. Because when people lose the faith in real estate and they don't see prices going up anymore, they're going to scratch their head and say, what is wrong here? This is what happened in 2008. And everything just came to a screeching halt. The Baltic Dry Index we've seen has fallen another 11 points to 587. So we're back in the 500 range already. Now, something very interesting that came out of Sovereign Man about how the Fed has brought back taxation without representation. And if we go back in time, we realize that the Founding Fathers, Thomas Jefferson, he included imposing taxes without our consent on the long list of grievances against Great Britain. And he put this in the Declaration of Independence. And this was enough to go to war. But when we look at our government today, we realize we have a central bank which does not have the best interests of the people in mind, is not a body that is elected by the people whatsoever, and they're actually taxing us without our consent, without representation. And the Fed has the ability to kind of control what we do with our funds. Think about this for a second. If they lower the rates or raise the rates, they have the ability to induce people to adjust their spending habits. If they want us little people to spend a little bit more, they cut rates. If they want us to spend less, they raise rates. So they can control us in that respect. The combination of inflation and low interest rates benefits certain people, and it causes the middle class, their savings, to lose purchasing power. This is a transfer of wealth from savers to debtors. In other words, it's a form of tax. Now, unlike a normal tax, which is passed by Congress, this one is created by the central bank using the backdoor approach. And we have to remember, we didn't get to vote for the 12 members of the Federal Reserve. We didn't. In fact, based on the way the Federal Reserve works, the majority of the committee members, they're appointed by the commercial banks. So this is exactly what our Founding Fathers were talking about. We're being taxed without representation. Now, across the globe, we are seeing many of the stock markets decline. If we look at the Chinese economy, we're seeing their stocks are down by 40%. If we look at the Japanese economy, the third largest economy, their stock market is down 26%. If we look at the German stock market, the fourth largest economy in the world, they're down 19%. If we look at the UK, the fifth largest economy, they're down 13%. France, they're the sixth largest, they're down 20%. And Italy, well, they are down 32%. Now, what about the U.S.? Well, the U.S. has the ability to manipulate a lot of different things. They have they have the plunge protection team, the high-frequency traders. The Fed steps in, gives the free money to the banks, has the banks take that free money and pump it into the stock market. This is what they've been doing with quantitative easing. And we see right now that the U.S., they're desperately, the U.S. government, central bankers are desperately trying to keep this market alive. Because once the market falls, this is what the general population looks at to gauge how the economy is doing. And we know this has nothing to do with the economy whatsoever. But the U.S. government central bankers has brainwashed the everyday person to think that this is the gauge. And this is why they're trying so hard to keep it where it is. Now, of course, many people are making a lot of profits off of it. There's different agendas associated with it. But you can see their main agenda is to keep everyone's eyes fixated on the stock market. Now we see members of the European Parliament, they're now asking Draghi to unleash helicopter money. Now, when we look at the central bankers, they have done many, many different things. They've bought bonds, corporate bonds. They've used quantitative easing, kept interest rates low, some places negative. And one of the last things they're going to do is take the currency, create a lot of it, and inject it into the private sectors. to hopefully stimulate spending by the people. Now, this might work in the short run, but in the long run, it will not work, because what happens when you continually put currency into the nations, into the world? It devalues the currency, and then you see inflation. Then you see hyperinflation. And this is exactly what we'll see. And this might be their only solution that is left. We don't know. They always come up with all different type of solutions. But in the short run, people are going to go, oh, look, it's working, it's working. Everything's great. But in the long run, it's going to fall apart, and we're going to be back in the same situation, but worse. Now, out in the UK, we know Jo Cox, 41, she was shot dead and stabbed. The gun was homemade. And this was done by Thomas Mayer. He's mentally ill. And of course, they're using this to say that, it's the campaigners, because supposedly, allegedly, which I don't even think it happened, he screamed Britain first. And we can see this might have been done on purpose, as a false flag, as something to be used to stop what is going on in the UK, because as soon as this happened, the Brexit campaign was suspended, is now suspended for the second day. Actually, the referendum vote is in limbo right now. They might put it off. We don't know. So we're going to have to watch that situation very, very carefully. The IMF right now is warning that the market rise in political risks threatens to derail the Eurozone's fragile recovery. They're already setting this up, trying to explain away why the Eurozone is going to fall apart. Actually, it has never improved. They're manipulating the numbers just like the United States. They're manipulating unemployment. Those people have fallen off. They don't count. If you look at the unemployment numbers, they have gone nowhere. They've stayed steady, and in some places increased. And in those places where it decreased, they're using the same manipulation as the United States. So what does all of this mean? Well, everything that we've been tracking up to this point, we've been showing how the real economy has deteriorated, how it is collapsing every single day, and how the government continually manipulates and massages and lies about all the economic information just to keep people in the dark of what is really going on. Because all of this is being done on purpose, because they know their system is failing. We're tracking it every day, so when this whole entire system comes crashing down, nobody says, it just happened. Oh, it was China. It was Russia. It was the Islamic State. No, it was happening all along. Industrial production, manufacturing, retail, housing, GDP, unemployment. We've been looking at all of this, showing how we are in a recession, actually teetering on this Great Depression at this point. John Williams from Shadow Stats, he's saying the real unemployment numbers is 23%. So think about what we've covered and what the government has been lying about. And we can see the outcome, because all we have to do is look at Venezuela. Right now, there are food riots in Venezuela. I mean, they came out, they arrested about 400 people in the recent days. People are chanting, "We want food." They're blocking major streets. There are food shortages. People are in the markets fighting over whatever they have left. And the director of Venezuelan Observatory of Violence, Roberto Leon, is saying that the looting is going to continue because there's hunger. And he's saying the government's response is completely insufficient at this point. Now take what's happening there and move it to the US, Canada, Europe. It's going to be a complete disaster. Listen, everyone, thanks a lot for listening. Be well, be safe, and especially be prepared. Thanks a lot.